Hello traders, Gary Wagner with the Gold Forecast. It is Tuesday, the 21st of December, and this is the Daily Report. Gold trading roughly a couple dollars higher this morning, currently at 1386.80, 1387.80. Very quiet sideways market today. We do have thin volume as we get closer to the Christmas holiday on the 25th. I do expect volume, barring anything harshly changing on the fundamental horizon changing, I expect it to be very quiet. Today's report, we will kind of go over the positions that we have and talk to you about my expectations for the rest of the week. Traders, if you recall, yesterday I had mentioned something about the fact that I believed we had really clear sailing up to about 1390. That's where we found resistance. When we look today, we are looking at a 60-minute chart. You can see that it did actually make a stab for that 1390 area to no avail. It did come back down. My sentiment right now is that's coming off of this particular band of resistance right above 1390, and that's technically what is giving us resistance right now. Another way of looking at the resistance, as you can see, I've put up our daily Hankin chart. This is where I kind of plot our buys and sells, our current positions. Of course, we bought our first position at 85, our second position at 82. I think that you can see on the Hankin chart that we do at this point have a pretty clear, solid buy signal. So I feel very good about that. The only thing is, as we go into the holiday seasons, I do expect it to be light in terms of trading, but that is a good indication. We are looking at a 180-minute candlestick chart. I use this particular chart to plot various what we call Fibonacci harmonics, points at which they match. But the reason I'm pulling that up, this chart up today, is you can see that it is absolutely range bound within this 1381. This is where I am showing support at this moment, and then 1390. This is where I'm showing resistance, and I think that we can see pretty easily that we are right now caught up right within this narrow sideways trading band. I think that's due more to the holiday season than anything fundamental in terms of news on the horizon. My weekly commentary for Kitco.com did go live yesterday. This is the chart that I used. We touched upon it just a little bit yesterday. I kind of wanted to bring it into the limelight before we close out today's report. And I do believe after much work that we are starting a new impulse phase right in here. And I do at this point believe that we have received a complete cycle that is waves 1, 2, 3, 4, 5, along with our A, B, C correction. I think that we have seen our complete cycle. I think we will start that anew again. And really over the next couple of days, and of course after the holidays as we get into New Year's, we're going to look at this a little bit more closely, because there is a lot of activity right within here in terms of the forecast, and that's going to be this next bull cycle that we can begin to look at, formulate hypothesis about, and delineate exactly what our game plan is going to be next year. Maintain the positions on the long side that we have, maintain the stop that we have. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.
When I look out my window,